Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. The first quarter has ended and earnings season is about to begin, and that means we're going to get a good feeling for what companies are doing in 2023, what direction they're trending, especially as we have rising interest rates and sort of questions about what's going on in the economy. One company I have 5 questions for is Verizon, so that's what I want to dig into today. My name is Travis William. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my content. Now, the first question for Verizon comes down to market share and where is its subscribers trending? The company faced a lot of headwinds in 2022 and started to really turn things around later in the year. But our competitors like T-Mobile and AT&T continuing to take market share. I think that's a big challenge for Verizon that they face for a number of years now. They've always been a very high margin, high price service, but can they start to grow their customer base a little bit more? That's really the kind of thing that would help the stock long term. But we're going to get at least an idea of where those trends are headed when earnings are released. Along those fronts, the one bright spot has been fixed wireless or 5G broadband. This is a product that you just plug into the wall and it creates a 5G hotspot in your home or business. This replaces the cable line or fiber line coming into your home with something over the air. I think it's a really attractive product. I've been using it for a while now. And that's one of the reasons that I'm so excited about it, because I think it's a natural growth aspect for Verizon. That service business is very high margin for them. So any customers that they can add to fixed wireless is going to be an incremental positive for the company. And they've seen tremendous growth on that side of the business, over 300,000 additions last quarter alone. So is that something that continues to grow? That's something I want to see for Verizon, and hopefully that will help grow that service revenue a little bit faster than it has been in the past. And related to that fixed wireless, if you're selling somebody their smartphone service and you're selling them their broadband service, the natural thing to bundle with that is streaming services. And so is this where we rebundle that cable bundle that has traditionally been with cable companies in the past? Do we now see that go with companies like Verizon? We're starting to see indications that both Verizon is doing that and its competitors are starting to do some of the same thing. Verizon has partnered with Apple and Disney to bundle their services together. But do we see that continue to grow, and is it becoming a successful service? That's really what I want to hear is that starting to attract customers and reduce that churn rate? That's what the financial impact is going to be for Verizon. So I think that's a reason to be bullish on the company, especially at the current stock valuation. But we need to see that there's actually progress on that front, on becoming a bundler for streaming services and broadband. The next 2 questions are really related. The first one is around Verizon's debt, which is about $150 billion now. And the other one is around the company's dividend. Verizon's paying nearly $11 billion per year in a dividend when it has an extremely high debt load. And as interest rates rise, that's going to become even more cumbersome for the company as interest expenses become a bigger and bigger number for Verizon. So this is something that I want to take together and look at this chart here. It's not all that surprising that the debt number is as high as it is when Verizon did buy out the 50% stake that Vodafone had in the company, and then also, the blip in 2020, 2021 really coincided with them acquiring the spectrum that is driving the 5G growth that we see today. So that's a good use of capital. The question here is, can you sustain this kind of dividend payment with this debt load? And I think that's really something that Verizon is going to have to grapple with. This is probably unpopular, but I would actually like to see them cut that dividend, maybe even to zero, and pay down debt at least over the next few years as interest rates are going up and those interest payments are going to start to increase. I just think from a sustainability standpoint, that gives you a lot more flexibility as a business to have less debt and not to have that dividend payment that you have to worry about. Now, there are a lot of investors that own Verizon specifically for that dividend. But given the fact that the stock trades in a single-digit price to earnings multiple and has a very high dividend yield, we're starting to see that I don't think there's a lot of downside in cutting that dividend. If investors want to sell the dividend because the dividend is going to fall, then there are going to be other investors that are going to buy it because they see less risk, because there's going to be less risk on the balance sheet from the long-term debt. So I think there's a balance there for Verizon, but those are really the 2 questions. Is that debt level sustainable, and is the dividend sustainable? And you probably can't have both things if you're Verizon unless you really grow the top line and margins that are coming into the business. So all of these 5 questions here really are related to each other. And if this is going to be a great investment, we're going to have to see that net income number go up, the cash flow number go up, and then management use that capital effectively to either invest in the business or return money to shareholders in one of a number of ways, whether that's paying down debt or whether that's paying dividend or buying back stock. So a lot of questions for Verizon, given the company's strong position. This is still a stock that I own. I am very bullish on the company, especially given this fixed wireless and the potential to be a bundler. But there are a lot of questions, particularly around that debt load and the dividend. So love to hear what you would like to see from the earnings report. Put those questions in the comment section below. Don't forget to subscribe to Rive Investing. Thanks for watching, everybody. I'll see you here next time.